this box right here, again, is based on horizontal support and resistance. I'm expecting at some stage for the Aussie dollar to get up to this area here, where it's hit this box in the past. They hit it here. And I reckon when it gets up there, it's going to have a little bit of trouble. Now, when I'm trading the long-term charts, what I'm talking about is essentially, I don't really consider a daily chart a long-term chart. I know a lot of currency traders would. I actually consider the weekly charts to be, the weekly charts to be what I would consider a long-term chart, or a monthly chart would be a long-term chart. Some people trade the quarterly charts. That's a long-term chart. But I want to focus in, for the purposes of this webinar, I want to focus in on the weekly charts. And I want to talk about what a lot of, there's some misconceptions out there, okay? How many people here have traded the long-term charts? Who here has actually taken a trade, at least one trade, on the long-term charts? Anybody? Anybody who has done this before? Yes, yes, no. Sandy says no. Trend says yes. Himashi says yes. Okay, so essentially, the way I look at it is it's no different than trading the 4-hour charts. It's just, it takes a little bit longer, The main thing that I hear a lot, why wouldn't you trade the long-term chart? Like Heinz says that you haven't traded the long-term chart. Why is that, Heinz? Why wouldn't you trade the long-term chart? Like, why wouldn't you take a trade on the weekly chart? Yes, and I'm glad you said that. Bigger stop loss. This is, and we're going to tackle 3 of these things tonight, or this morning, actually, if you're in Europe, as many of you are. And so let's talk about these 3 things, because the number one, and I was kind of trying to fish it out of you, and I'm glad Heinz went for it, which is, this is the idea of a long-term trade means a wider stop, or bigger stop. Yes, and exactly right, Trend Trader. Yeah, so here's the thing. Let me show you one, actually. Let's see if I can find. Let's see if we can find one. Okay, so here's one. All right, so you know what? This one was only 106 pips, so that's actually not a very good. Let me actually find a better one. You know what? We don't even have to actually have, that's daily anyway. Let's find a trade and let's calculate it. Let's say that you are a, let's say that, this isn't really about trading the big shadow, but let's say you're a big shadow trader and you identified this big shadow as a high probability setup right here. Oops. Let me pull this back. So let's say that we'll if you haven't seen the big shadow system, we'll do another webinar on it so that you get the rules. But basically, it's a big engulfing candle. It's taken out the previous candle. It's got a higher high. It's got a lower low. It's got a close up near the high. It's on a significant area of support and resistance. The next candle trades higher. So normally, if I was going to get in on this one, I would get in probably around here, and I'd have a stop down here. That's about 877 pips, which is not a lot to sneeze at. Now, the euro kiwi is more volatile than, for example, the euro dollar. It's one of those pairs that really likes to move around. So even though you think 877 pips, that's a lot, it's not that much for the euro kiwi. The other thing that I want to point out about this trade is that, well, we'll get into that in a minute. I don't want to jump the gun. So I look at this and I go, Oh, wow, 877 pips. That's crazy. But if I go to the Euro Kiwi, which is, where is it? Where is it? Where is it? It's going to be down here. So let me show you guys. Um, right here. It's going to be right. Euro Kiwi. Fox Majors. It's not a major. Where the heck is it? It's not the extended either. There it is. Okay, cool. So if I look at this and I go, oh, okay. So, I'm looking at a standard lot size here, right? Um, my swap isn't really, if I go long, I am paying a little bit here. Yeah, but I'm happy with that, and I go ahead and jump into it. Now, let's say that I'm looking at this target right here, this resistance level right here, which remember I had 877 pips. It's only 460 pips away. Okay, so what I might have to do is actually draw another area of sort of like a minor level, which would have to be actually here. It is right here. See right there. Yeah, that's it. Essentially, these lows right here were found right here. So what I might have to do, let me just double check this. Yeah, there you go. That's 950 pips. So I've got 950 pips on 877 risk. That's better. Now, I probably wouldn't have been able to go for this area because it's just too close. Here's the thing, guys. Because you can adjust your lot size, there is no excuse for not taking weekly charts. If you look at the weekly charts and you say, those are really good. I love the way that moves. These are smooth charts. They're predictable. Things happen in slow motion. I can still, like, if you have a job, you can still work your job and trade them or whatever. The number one thing that comes up is people will say, I can't do it because my account's not big enough. Well, here's the thing. You don't have to trade a standard lot. And if your broker makes you trade a standard lot, you all you have to do is find a different broker because you can set your lot size so that your dollar at risk or euro or pound or whatever currency pair you hold your account in, that amount at risk is actually the same as it would be if you took a trade on the 1 hour chart. And the reason why that's the case is you adjust your lot size. So for example, maybe if I took a 1 hour chart trade and I had a 30 pip stop, maybe I take 3 standard lots, right? But maybe if I have an 877 pip stop loss, I don't take 3 standard lots, and instead I take 0.15 standard lots, right? Or something like that. So that's kind of how it works is you've got to go in and adjust it. And if your broker doesn't allow you to do that, if your broker doesn't allow you to take, micro or mini lots and really get down to the fine tune and nitty gritty, then I would say find a new broker because there's no reason. In fact, there's no reason not to trade a trade when you see it on the charts. And if your broker is the reason for that, that's getting in the way, then time to find a new broker. The other interesting thing about this is that if you have the precise risk right on every trade, what that means over time is if you have a winning system, it actually means more money in your pocket. And that's all math. That's not any sort of, wild claim that I'm making.